Hi everyone, welcome back to Be Rich. It's me, Vinod, recording remotely from Bangalore. As I'm here for an event, I wanted to get this video recorded, so I'm sorry if the audio quality and the video quality are not up to spec. As we're recording right now, the Asian market seems to be happy with the liquidity which has been promised by Fed, and the Nikkei has been up, and some Chinese blue chip companies are up even 10%. But some of this Chinese stock prices which are going up is not thanks to more global push. It is more that the domestic demand has been going up in China thanks to the savings of the domestic participants in the market there. Their savings is making its way to the stock market in China, fueling stock prices to go up, especially some of the blue chips which are up 10%. So why is this momentum? And is there something that we should be taking note of? Why is the stock prices going up? Stock prices are going up, so people are buying. And why are people buying? Because stock prices are going up. This seems to be a loop, and this positive feedback loop which is going on is what is really pushing this stock price up. But if you see the European market, what happened after Friday, there seems to be some sobering happening there. The euphoria which was felt was short-lived, and the market slowly seems to be waking up to this point that the euphoria is going to be very short-lived because the world's largest economy doesn't seem to be doing very well. The reason why I'm saying this is if you see the Fed, which is now offering a rate cut, even as inflation seems to be going up to 3% or above, the same Fed was the one which was refusing to even budge on the rate when the inflation was where it was, or even a little lower just a few weeks back, saying, no, we cannot do a rate cut. The inflation from the tariffs are terrible and it's going to be coming, it's coming soon. Now they seem to be talking differently about the inflation. And why matters? Because this is mainly due to two reasons. If Fed is cutting the interest rate thanks to cooling in inflation, that means that's good news and there's something to cheer about. But honestly, that doesn't seem to be the case. Like I said, it's going up towards 3%. That means there's another thing entirely happening, and it looks like the Fed needs to step in and support the economy. There's a sudden rise in unemployment, and that's not a good sign. And what the Fed move has done is it has led to a sudden move by the Fed has led to something worrying in the Treasury curve which is happening. The Wall Street has just finished. Currently, it's making its way through $183 billion supply which was given to them last week in terms of treasuries, and that itself is a massive boost for a large market like the American market. So this rate cut is, if it does come, it's going to be interesting where the treasury yield finally goes and sits. Meanwhile, because if you see the dollar index, it has been weakening, and globally speaking, the bond market seems to be a little worried about the dollar, which my brother spoke about last week. And if we look at Nvidia, their reports are expected soon. And to justify the pricing where Nvidia sits at, their earnings not only need to hit the moon, it needs to go beyond the moon and hit the stars, because they are currently holding a $4 trillion valuation, which is almost the size of the entire Nikkei index. That gives you perspective of the size of this company, where it's sitting at. So what is the earnings that we need to see? We need to see a rise in Nvidia's earning of almost 48%, which is almost $46 billion. And that is a very, very high bar for Nvidia to hit. So if you see the options market on this, it seems to be split. So there seems to be even spread on both sides of this. Some believing they will hit, some believing they won't hit. And of course, last week we spoke about the MIT report and the AI bubble. Me and Anand spoke about that. And there is deep fear now in the market. Are we in for another .com? And that is haunting the market. So markets are sitting and watching how Nvidia also plans to play Trump, this 15% of its earnings from the chips it supplied to China. And there's even a huge question in if it's even constitutionally correct that this is happening. So what do we do as investors? The basic thing I would say is to be patient and not rush into this current market where we are at. If anything, there seems to be a lot of uncertainty, and macroeconomically speaking, what Fed is doing is clearly showing signs that the American economy, the world's largest economy, is not doing very well. It is going to be an opportunity for investors where we are going to see options to invest in these stocks which we have been thinking about for a very long time. in slow increments in the coming weeks and months ahead. So I would not say this is a time to have FOMO. Do not join the bandwagon where, like I said, there's a positive feedback loop happening. The markets are rising, so people, why is that rising? People are buying. Why are people buying? Because the markets are rising. So there seems to be a vicious feedback loop going on, and there is nothing sound which is there for us to cheer and to support this kind of behavior. That is what I'm trying to say, and if Anand was here, he would probably agree with what I'm saying. I'll try and bring him in tomorrow, maybe on a stream, or probably I'll get him to do a live video to talk about more about this further and give you a further analysis on what all this means. That is why even in the Indian market today, on the onset, we saw some positive movement. At the time of recording this video, the market is up almost 0.5%, and this is thanks mainly due to the positive news which we have been hearing from the Fed as we closed out on Friday. Friday, our markets were closed when Fed came out with the news, when they've taken this dovish stance, and European markets cheered and the American market cheered. So we're having the residual effects of this cheer. So this would probably be more like a bounce than something sustainable. So be careful if you're investing. I would strongly suggest that you stay in tiffin coffee range of investing if you are playing in this market. As far as sectors are concerned, I would strongly suggest not going into any tech-related sectors. We saw the correction in the Nasdaq, and that seems to have recovered thanks to the dovish stance taken by the Fed. We'll have to wait and watch, because all what I've said is still true, and none of that has changed, what me and Anand have been speaking about in the last few videos. If you are looking at sectors, look at defensive sectors, and that would be the place where to stay at, even if there's a recession or the worst case, a stagflation. These kind of companies are the ones that can weather the storm. So our suggestion would be to look at these kind of defensive stocks. Those cyclical companies should be avoided, and to focus on these bread and butter stocks to make sure that we can weather the storm if you are interested. Other than that, you can park it in Anand. Like Anand said, there was confusion in what Anand was saying. He was not talking about investing in Swiss bank. He was talking about the Swiss currency, the Swiss franc. He would suggested that if you have cash in dollars, and if you're outside India, if you're not in the Gulf, if you're not in Singapore and not in Africa, if you're in Europe and you're in US, that you can look at moving some of your funds into Swiss franc, the currency he's talking about. He's not talking about doing any trading in currency. He's saying for the short term, if you want to, secure some of your currency for the short term, your holdings for the short term, he says you can look at the Swiss franc as a holding, converting some of your dollars into Swiss francs. This is what he would do if he was in your position, is what he was trying to say. I hope that gave some clarity. If you have some more confusion about that, please put it down in the comments below, and I will try and answer it in the next video. Thanks for watching Be Rich today. Like I said, I'm sorry the video and audio quality ain't to scratch, but it's the best I could do given the circumstances. So thanks for watching the video today. From all of us here in Bangalore, I wish you a wonderful evening. See you tomorrow with another video with something more. Thanks for watching Be Rich today. Bye.